Devin, morning. Thank you for joining us. Devin, apart from S&P, what was the real reason why markets corrected on Monday?
Yes, good morning, Nikunj. The S&P warning is not a new warning for sure. I think it is something which is already known to the market. Unfortunate part is that I think the warning has come again as a bad news for the market. Already I think this market wants some fresh news, some good news, but they are not coming in. And unfortunately the FM, PM and the Finance Ministry people have been making these statements which are absolutely misfound, wherein they are showing the optimism for the growth on the GDP side, and they are in turn talking about turning around of the economy. But indeed they are not taking any real measures to bring the fiscal discipline into the country. Neither I think they can take any decision for, I think, bringing down the current account deficit. So these are all some of the issues which are having an overhang on the minds of the people. And at the same time, I think they are not willing to participate into the market because of this lack of trust in the entire system. So to my mind, I think yesterday's fall which has come, probably I think would have come in any way, I think because of the natural correction for the Nifty which has already moved up by about 300 points. I think it has to have some amount of corrective downside. Of course, this market cannot slip down more because of A, the higher amount of short sold position in the market, which demands some amount of short covering at periodical level. And B, most importantly, I think most of the positions are hedge positions. So in one straight line, it will not come down. So even if they came down yesterday, I think it was I think more of a corrective fall, as I would call it. Blame it on the news, blame it on the IIP data which are likely to come today. So these are all some of the issues for which I think the market had to take some corrective action. It has taken this yesterday.
Today as well, David, does it seem like after the S&P warning, the April IIP data is going to weigh heavy on the Nifty today and perhaps maybe direction changing as well?
Not too sure whether I think it could be, I think, changing direction for the positive at this point of time, because the numbers are unlikely to be on a very positive side. Though I do believe that on a month-over-month basis, when you start looking at these numbers, I think you may find some amount of optimism at some point of time, but not in the month of April as I see it, I think. So I am not very confident at this point of time to buy on IIP numbers. Yes, I think the RBI's action next week probably I think would ask me to look at the market once again, because if they are indeed bringing down the CRR by 50 basis point and if they are bringing down the rate by 25 basis point, then in such kind of a situation you would probably see the growth assuming the priority, and that could possibly bring some amount of confidence back into the system. And that's something which we are looking forward to it. But along with that, I must say that the enough amount of efforts are required to be taken to bring down the current account deficit and bring the rupee up to 50 levels. If it is not happening, then probably we are going to have a mess at the fiscal deficit level and probably the downgrading threat which S&P yesterday talked about.
Let's look at Voltas. Voltas on Monday shut shop at 108. It is a 14% in last 5 days, even though if I map the 1 year performance for Voltas, it is still down by about 32%. 52-week high for Voltas 174, 52-week low 71. So in quick time, Voltas is up a good solid 30 rupees from the 52-week low. Devin, what is driving Voltas?
Again, Nikunj, they have got the Gulf orders which are basically, I think, driving the order book positions for this company, and that's where the FY 12-13 is expected to show some better performance compared to last year. All of a sudden, I think most of the capital goods players and the people who are participating in infrastructure development like L&T, Voltas, Siemens kind of companies have already started showing some amount of strength more because of some optimism coming back, wherein the PM is taking the direct interest in kickstarting these infrastructure projects. So maybe I would say some amount of re-rating is happening. Maybe I would say that I think people are buying on the valuations, because more important, this is the important factor as well, that today many of the stocks are available at a very, very attractive valuation. Any positive movement happening or any good news coming in richer area belonging to these companies, probably I think you would find buying interest coming up. And most of the investors are interested in buying at low levels because they want to show positive alpha in the portfolio. So probably I think you can count this as one of the possibility where the capital goods players like Voltas, L&T and Siemens kind of companies have shown an upward trend in last few days.
Morgan Stanley is of the view that HCL Technologies is attractively priced. It is interestingly positioned, and the kind of commentary the management has shared HCL Technologies in the near term has scope of outperforming large cap IT stocks?
Yes, Nikunj, I think and it is indeed true that I think the management is definitely giving very positive tone as far as the prospects are concerned for this company. And even if you look at the company at a 11-12 kind of a price earning ratio, the valuation is not expensive. So both, I think the prospects emerging for HCL Tech and the valuation, both are working in favor of any investor to add this particular stock in the portfolio vis-a-vis their frontline peers who are basically quoting relatively expensive at this point of time without I think much of a confidence on the growth side. In case of HCL Tech, I would probably think that the growth is largely happening more because of the kind of initiative that they have taken on going aggressive on the business model itself, wherein I think they probably are not as gung-ho about asking for the price vis-a-vis the kind of a competitive pressure that they are facing. They are basically, I think, going ahead with winning money contracts, and that's where the volume-based game that this company has adopted. So it's an interesting strategy. The company has been moving very firmly in this kind of an environment and suggesting that the growth is in store for them. So certainly I think it would demand add into the portfolio within the crowded space of IT where the headroom is less. HCL Tech possibly is suggesting that it could have around 20% kind of an upside going forward over next 12 months.
Devan, there are news reports this morning that DLF perhaps may have sold its hotel arm to Kolkata Consortium for a sum total of 567 crore rupees. Do you think this news could materially impact the stock movement as well?
In a normal market, yes, it would have definitely impacted this particular news flow as a positive, and the stock probably would have demanded the positive kind of an attention from most of the investors. But in this market, probably I think this sector itself is not assuming greater amount of priority from the fund side. Not many funds have mandate to invest also, I think, as I understand, because they would probably think that this is an area which is still a lot of, I think, garbage is yet to come out of the system. So probably I think not many people are wanting to buy into this particular area, the investment sector itself. Forget about the company. And as I have said that I think DLF within the space would demand a kind of an attention in a normal kind of a market wherein people would come for and buy as a first priority. But as of now, I don't think that I think market would be very enthused to buy into this particular stock given this news. Maybe some knee-jerk reaction and an upside could be possible in this kind of an environment, but not serious investment.
David, do you think Ken again would see more weakness considering there has been a steady decline in crude prices?
Well, if it does, then probably I think below 300 it would become a buy opportunity once again. Simply because on the valuation front, the stock is remaining attractive. Of course, it has its own set of, I think, uncertainties hovering around. And probably I think the government-related issues keep on haunting some of these companies. So from that point of view, there would be, I think, a threat on the stock as well. As far as I think the rating is concerned, it may not probably go up. So to my mind, I think anything with bargain levels below 300 would be the first opportunity to look into these stocks.
David,
once again,
can I challenge you on your Ken assessment? Because if your outlook is that you are bearish on commodities, if you are bearish on commodities, why are you bullish on Ken?
Well, Nikunj, I am bearish in commodities, I think, in the near term. Till the time, I think, the overall global environment, particularly, I think, the Eurozone, things get settled down. I'm not talking about the pricing part of it, I think, over that, which will improve in near future. I'm right now, I think, more importantly looking at the demand factor, the volume growth, I think, which is happening, which is unlikely to happen due to the euro problem itself. In my viewpoint, I think I'm a little bit more confident on the other than PSU exploration companies, more because I think the India shore demand is continuing for them and they have plenty of reserves to talk about. Their volume growth is expanding, and because in commodity segment, I think either you see the volume growth expanding or the price happening or the price growth happening. Here in this case, I think the volume growth is likely to happen in case of Ken India. In this market, I think relatively if you want to buy inexpensive stock, probably I think below 300 it would demand some amount of look again, I think, to add into the portfolio. That's the reason for which I think I said that we probably would like to get into Ken India again. Of course, fully aware about it, I think the kind of issues that the company is passing through on the cess front as far as the taxation is concerned, and that's where I think some amount of de-rating has already happened into this stock. But otherwise, I would think that because the sheer growth in the volume happening, this stock would demand a relook at lower levels, and I don't think particularly that the oil prices would fall below a point maybe I think at current levels it may probably show the signs of stabilization, $5 here and there.
Devin, if I give you the option not to talk about Adani, Reliance and Praj, give us one more fresh idea where the downside is 15% and the upside is 50% in the next 2 years.
REC would be my clear choice. I may have talked about this stock earlier also. The reason for which I am buying into this stock, as we heard, I think the restructuring of the loan portfolio of SEB is already happening. That's where I think this company is likely to get a little bit favorably, I think get affected or impacted. The second point is that the stock is available at a valuation which is just 1 time the book value, which is something where the downside is limited, and that's your first point where I think the downside is limited. So to a greater extent, I think if the valuation is in favor and the growth is continuing at around 20 to 25% in case of company like REC, probably I think this stock could probably result into 50% plus kind of an appreciation criteria that you have said. Maybe not in 1 year, but maybe not in 2 years, but I think as early as I think 12 to 15 months in a normal market situation.